Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, 25th day of February 2015, and this is the daily report for gold and silver. Although well off the highs, and that's something we definitely need to touch upon, gold is trading higher, up around $3.50 to $4 on the day, 1204 and change mid-range. It's had a low of 1201.50, a high of 1212.20, and as I said, currently up about $3-4 on the day. Silver is trading higher also on the day, up about 20 cents, 16.52. It is down near the lower end of the range. High end of the range has been 1666. On the low, 1645. You can see that on our daily chart, we have seen our first green candle in a considerable number of days. We'll touch upon that along with the signal that seems to be kind of unfolding in both gold and silver. So traders, as I said right at the onset of the show, gold is trading higher, but it's well off of the highs of the day, which to me is something that is absolutely important as we look at this marketplace itself. And here is why. As this market has been in a defined corrective period, it is a corrective period coming off of a run which roughly started 11:30, moves up to about 12:30, retraces 61%, then moves higher. At this point, the best count that I can ascertain, because of the fact that this last correction has gone so deep, it would negate having a 1, 2, 3, 4 count, and rather the way that I'm looking at it at this point from a Elliott wave standpoint is simply looking at this entire move of 11:30 up to 13:07 as a wave one. This wave one is simply divided into a 3 count. And with that in mind, this correction, therefore, would be about 61%, which takes us to roughly 1198. We've certainly touched that, and we've touched that below. Now, given that, meaning that this is a logical place to look for a conclusion of the correction, we now need to see a candlestick pattern in terms of the way that we filter the market that would give us an indication that the market has in fact bottomed out and is now moving up. Over the last few days, we have identified these doji candles. Let's go ahead and blow this up a little bit, but these doji candles as being a consolidation in the market, because what a doji tells you is neither the bulls nor the bears have ultimate control. The more of the range between the high and the low really tells you the strength of the battle itself, the amplitude, I should say, of the battle itself. It's a pretty fierce battle when you consider these extreme highs and lows. And then what we were looking for to really give us what's called a 3 river morning stars. You get a red candle, you get 2 stars, and then you should have a large green candle with a higher high and a higher low. Of course, this candle's not drawn to size, but it would look something like this. Now, this is what I find interesting. As I was watching the market trade overseas last night, and we were up near these highs, up about $10, we had that large green candle, because realize that this open here is going to stay the same on a green candle, but this line here is going to change as the market trades. So when it was all the way up near the highs, it would have been a large green candle. Now, that being said, if that would have been what we saw today, and let me see if I just can't draw this in a little bit better, but if we would have seen a candle something like this, meaning where it closed near the highs, you can see that the pattern that it would form would be a variation off a 3 river morning star. That would be an excellent buy signal, seeing as it comes at a 61% retracement. So all things being equal, a close that was at this high, we could have in fact waited for a confirming candle, and the confirming candle on a daily chart, of course, would be the following day. Higher high, higher low, green candle would look something like this. And so the fact that we did not close near the highs is significant because we didn't see any kind of follow through. So we certainly will still await to see if the market, because we did get a green candle, but we will await to see if tomorrow's trading activity gives us some sort of a green candle. And it's going to have, as I said, a higher high and a higher low. Now, we have seen this happen before with these small body candles, and that's the other reason that I have this concern currently with the way that these candles are kind of unfolding. This is a green candle. These are dojis. This is a red candle. But if we look back at the activity of this most recent market moves, when it was trading near the 61% retracement dash 50% retracement of this rally here, we did get a long red candle. We got our star, and it was an inverted hammer, which is a shooting star inverted hammer. Then we got our green candle, which really this completed the Three River Morning Star, and we actually got our confirmation. Now, the confirmation itself was a very, very small body candle, but it did meet the criteria with a higher high and a higher low, but that was followed the next day by a tremendous sell-off. So I'm really looking at body size on these green candles and follow through before I actually trigger any kind of a buy signal here, because my sense is that unless we see some really strong follow through, and I'll try to find some places in the market where we've actually seen something like that. But even if we look at this area right here, you got your red candle, very, very small star. Green candle is not much, but your confirming candle is pretty large here, and it actually breaks above these tops. You can see that that really genuinely signaled a pretty nice rise in the market. But what we have to be careful of is this kind of a scenario in which we're not really getting any kind of strong follow through. If you look at this candle compared to this last one here, it's much, much smaller in terms of body size, the range between the open and close, and it's almost doji-like. And if this tail was really any longer, because it's only about twice the size, if it was 3 times the size of the body, you could in fact look at that as a inverted hammer again. And so we're getting a doji, and this is green, but the fact that we didn't close near those highs tells me we're again at a small body candle. We don't have really any kind of real conviction to move this market back up. Now, we had the equities markets, which has just been rampant, running to record high. I think the NASDAQ's been up for 10 sessions in a row. That was stronger for most of the morning, but softened just on the close. So if we see the equities markets begin to soften, and we'll look at that chart in a second, time permitting, but if we see the equities market soften, we could see a real boost, of course, in gold prices. We also have some hotspots, geopolitical hotspots, Ukraine and ISIS, that are supportive of gold. So we'll have to see how this unfolds. But as I said, this pattern is developing, but it isn't developing with the kind of strength that I really believe we need to see to actually issue or trigger any kind of buy signal. We'll still be in a holding pattern, in other words. So in terms of any kind of bullish scenario, those are the factors that we definitely need to see. Now, there's another way that we can look at this market in terms of a straight Elliott wave count and in terms of the market moves that we've seen. If we look at this, for example, right in here as an A, B, C, meaning we're still in a bearish trend, rather than us having a bullish count up, we are now in our corrective phase of a bearish market, which would mean this would be our A wave here. And then what we're experiencing here would be a B wave. Now, a B wave will typically go anywhere between 50 and 75% that of A. And so traders, what I have done is I've just added the 75% mark in terms of a what we'll call a sweet spot. So figuring 50 is somewhere up here, here's 75%. We could then see the market track something like this. We have an A, a B, and a C. This would complete an A at 1, 2, 3. Our A, our B going to 50 to 75% of our A wave up means it could even come as low as 1175. and then it would culminate with the final C wave up. That is another possible scenario in terms of the count. So by looking at the candlesticks, by looking at an Elliott wave count, and then lastly, by looking at our Japanese average charts, and the reason I do that in terms of a last play in the market, in terms of looking at it last, is that it's always going to be a lagging indicator. But when we look at that, just like we saw in silver, we do have our first green candle in quite some time, but we need to see some sort of follow through on this way as the markets move down. We have seen this green candle before, but with absolutely no follow through. So we'll have to see if we get follow through here. If we get a completion of the Three River Morning Star, then we know we can act accordingly. If it breaks below this point, we'll look at our second bearish scenario, and our basic target in the market is probably going to be somewhere around 1175. And traders, just as we looked at gold, when we look at our daily silver chart, we're really getting the same kind of a scenario. Now, when I compress it, you've got to account for this move to 14, but we are trading now above our basic support line that we have identified, and we have a green candle. The question is, will we get follow through, or will we get a scenario similar to what we saw in gold or in silver? Silver, you can see you had 2-day moves that went to the up before moving back down. So we need definitive confirmation before we act. Either way in the market, we're still at that crossroads, but each day we are getting more and more information. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow on Thursday for another daily update and review. Bye-bye.